Hello, my name is Achim Amann from Black Label Properties here in Berlin, Germany. Today I'm responding to your question, why do people purchase or invest into Berlin properties with tenants who will not leave the property and pay very low rent? As just promised, I'll now explain to you how the system works in Berlin, Germany when you buy a tenanted apartment with a 10-year contract, so a 10-year time period where the tenant cannot leave or does not have to leave the property. So we just took an apartment we're having on our books just now. It's now 2021. It's a property in Berlin Friedrichshain. It's in Reichsstrasse. For these of you who know the area of Berlin a little bit, it's in a very posh and kietzy area, as we say here in the city center. Purchase price 200,000 euros. It's a 50 square meter apartment. The purchase price per square meter are 4,000 euros. So a fantastic asking price in today's market. Today's market would be 6,500 euros a square meter, assuming the apartment would be vacant and it would be completely refurbished. So we're looking at a normal market price of 325,000 euros compared to the purchase price you are having of 200,000. But please keep in mind, the tenant is living there, he will not leave, and the apartment is not in great condition. The only great thing here in the apartment is the location. So the difference here between your purchase price when you buy it and the usual market price is 125,000 euros. The rental income you're having here per year at 3,600, and this would be a yield of 1.8%. Complete disaster. If you are looking at a property with 1.8%, it's not really worth investing into it. That's what many people are thinking when they're looking on a listing, and they don't move ahead after that. The normal rental would be 9,000 euros a year. So we're having at the moment 6 euros per square meter on that existing rental contract. The market rent would be 15 euros per square meter, assuming the apartment would be newly rented out and would be completely refurbished. So we're looking here, if you compare that, at 4.5% yield based on the net purchase price, which is of course much more interesting for an investor. The usual yield here in Berlin for a refurbished Altbau is around 3%, sometimes only 2%. Depends on, of course, the location and the condition of the apartment. Then we have the makler, which is the agent, which is 3.57 as transaction costs. You also have the taxes, stamp duty, the transfer tax, which is 12,000 euros or 6%. It's a one-off tax. You have the notary and the lawyer, including the land registry, the court, which is around 1.5% or 3,000 euros. So in total, you're looking at 22,140 euros. The total purchase, including transaction cost, therefore, is for you 222,000 euros, or 222,140 euros to be correct. If you look on the deposit for a German taxpayer, it's only 10% in average. So you would invest only 22,000 euros into that property. The mortgage you would get from a local bank is nearly 200,000, so which is quite interesting. So the interest rates here, average interest rates would be 1.5%. Again, only for German taxpayers. And then you have 3% repayment of capital, which is pretty high compared to other countries. However, we just continue to work here with 3%. So we're looking at 6,000 euros, nearly 6,000 euros on repayment of capital for you. So the total cost for you, cost of finance, is 8,996 euros. If you then subtract the rental income, just keep in mind it's very low. It's only, just go up 3,600 euros. So if you take that off, you still have 5,396 euros loss year on year, which is cash flow wise 449 euros per month, you're losing, which is of course not really interesting. But please stay patient. The numbers are getting better from now on. Yeah, the yearly, we call that, the value you're adding to your own pocket, because you're having the repayment of capital, which is nearly 6,000. It's also the same figure here. It's nearly 6,000 euros. So you are paying the bank off the 6,000. So you basically earn year on year the 6,000 euros, which is nearly 500 euros. So you're losing 450 on cash flow, but you're gaining 500 euros on value here in Berlin of the property. So then we have the taxes. Again, please speak to a local tax advisor. We are no tax advisors, so we just can give you our ballpark figure here, because taxes are important, especially when you pay taxes in Germany. We have high taxes in Germany, so it's always important to be aware of how you can minimize your tax. So we have the interest you can completely take off, well, at least from your personal income. So the interest a year is 3,000 euros, which is roughly speaking 249 euros per month. Just to explain, is your personal tax rate is basically important here. So please ask your local lawyer and or tax advisor to give you that figure. We have depreciation here in Germany. This is a normal property. It's not a listed apartment or property, so we're looking at 2% depreciation. Please take off the value of the plot of land, because you cannot depreciate the plot of land. You just can depreciate the property itself. So we have took that off. Just again, this is a ballpark figure, which is another 3,500 euros per year. So we're looking at 296 euros per year. Per month, sorry, you can take off. So again, if you take all the tax advantages off, so which is 6,500 euros, you still have a loss year on year on 3,800 euros. However, the 3,800 euros look much better than the 5,400 euros before. Please be aware of, you're paying off the loan to the bank, so that might change tax-wise, because the interest here is pretty low and the repayment of capital is pretty high. So on average, you have lost 316 euros at the real cash flow, assuming you're paying taxes here in Germany. Again, not a great deal, but it's getting better now. So in 10 years' time, when you are selling the property, we have still the same address, we have still the same costs of purchase, so this is 222,000. The size hasn't changed. The only thing that has changed is the condition of the apartment, of course. These are the investment you have done in the year 2021 for this year per square meter. So it's a 4,442 euros. In the year 2031, the average price, assuming we have a 5% growth rate at the moment year on year, so we're gaining 150% on 6,000 euros, which is the average market value of your property today, if the property would be vacant and unrenovated, would be, or just slightly renovated. So you would gain 150% in 10 years. Again, this is I know we have to make the interest on interest, and we have to do the right formula. I just want to show you the logic here. So the price per square meter in 10 years time, if we have only 5% growth rate year on year, is already 9,000 euros, and you only have paid 4,400 euros this year. The rent, you can increase the rent per year maybe by 3%, depending on the local regulations. We just have made an assumption here, which is 3% per year. We have even been a bit more optimistic, because you have now very low rent, so we have said you can increase the rent by 5%, but only every 3 years, which is 15% every 3 years. So we're looking at 5,220 euros in 10 years in rental income, which is still a very low rent for the apartment. The market rent in 10 years would be, of course, much higher, around 13,000 euros, with the same logic I just explained. The purchase price was 222,000. You can see here the market value of your property in the year 2031. Of course, it has to be renovated and vacant. But in 10 years' time, the tenant has no further protection against a buyer who would claim self-usage. Is 450,000 euros. So that's just the average square meter price in 10 years, assuming we have the 5% growth year on year, multiplied with the surface. You have paid 222,000 in the year 2021. You have renovated the apartment in the year 2031, which is roughly speaking 50,000 euros. From today's perspective, that is quite expensive. 1,000 euros a square meter renovation is a lot. This includes the kitchen, the bathroom, the floor, the tiling, the electricity, everything. And then, of course, you have paid 30,000 euros on interest over the 10-year time period. Again, this might be a little bit less, because you also have paid off the mortgage. Just to explain you the logic. So the margin you would have made in the year 2031 is 147,000 euros in profit. This is a very rough estimate. However, you can see it's a fantastic performance, 66% return on equity year on year, assuming that you are selling the apartment in 10 years' time with a 5% growth rate year on year, and that your apartment will be sold in 10 years vacant, which is quite likely, because in 10 years' time, the protection for the tenant has ended, and also your mortgage contract has ended. We have only 5% growth rate, which is from today's perspective quite realistic. We have much higher growth rate, but we are more conservative. We don't think you will have 8, 10, 15% year-on-year growth figures forever. That won't work, which is still, with 5% you're still well off. So please feel free to contact us to challenge our assumption here. I hope it still explains to you why people are buying badly tenanted apartments here in Berlin or elsewhere in Germany, as long as they are in prime location. It's a good business for some people, especially when you're having to pay taxes in Germany or maybe elsewhere in Europe, and that you have income, steady income, maybe from other assets in Germany or elsewhere, and you can use the negative income you're having here, especially to offset some of your taxes, and then in 10 years you have the tax-free option to sell your property in Germany, because 147,000 euros is tax-free after 10 years. That's today's law here in Germany. Again, if you have questions, please contact us. Please speak also to a local accountant, a chartered accountant here in Germany, who can double check the figures for you, and please feel free to contact us anytime.